Berkshire Hathaway just released their quarterly reports. Warren Buffett now is sitting on almost $400 billion worth of cash. Berkshire is by far the company that has the largest cash pile. The second company is Microsoft. It has a $4 trillion valuation, and yet its cash pile is just $100 billion. So essentially, Warren Buffett is sitting on 4 times more cash than a $4 trillion company. Berkshire Hathaway also did not participate in any kind of stock buybacks. Even though that Warren Buffett has stepped down as the CEO of the company, he's still the chairman of the company, and the company follows the rules and the guidelines that Warren Buffett built into the company. So let's find out what exactly Warren Buffett is planning to do with $400 billion. Investors are worried about Berkshire, and the stock has been going down over the last 6 months. It has reached its peak of $530 back in April and March, but since then the stock has fallen down to $475 per stock. The most important thing to pay attention to is that there were no buybacks in the last quarter. Warren Buffett is in favor of stock buybacks because there are essentially 2 ways that a company can return that cash back into the hands of the investors. The first one is dividends, when you directly simply pay dividends to your investors. You built a business, you made a profit, and now that profit goes as cash into the hands of investors. The second way to give that money to investors is through stock buybacks. That's when the company taxes its free cash flow and starts buying its own stocks. So when you reduce the number of outstanding shares while the demand is still the same in the market, the price of the stock instantly rises, and that helps investors. So even though that you did not actually receive real cash from the company, the value of your stocks have jumped dramatically. Now you can sell them for a higher price. So your net worth essentially grew. Some people might not be a fan of that strategy, but it has actually worked for multiple companies. In fact, it's one of the reasons that allowed Apple to become the most valuable company in the world back in 2020 and 2021, because they have massively begun buying their own stocks. You made a lot of money and you don't see a single good reason to deploy that capital. Yes, you can take that money invested in a startup, but that startup is risky. You can buy another company, but if you're not sure how you can grow that money, the best way to do that is when you realize that your stock is undervalued, and you, as the one who is running the business, you know the value of your stock, you know your business, you know your products, you know what you're about to expect. So buying back your own stock sometimes is the best strategy. If you look at the history of stock buybacks of Berkshire, you see that they have actually went down dramatically over the last few years. In 2020, they spent almost $25 billion buying back their own stocks. That's actually a lot of money for a company like Berkshire. Next year, they spent $27 billion. This was the moment where the stock was actually trading below its value. If Warren Buffett is the greatest investor of all time, he certainly knows the value of Berkshire stocks. He knows at what price the stock of the Berkshire is undervalued or overvalued. So it seems like back in 2020 and 2021, according to his opinion, Berkshire was insanely undervalued, which is why he spent more than $50 billion buying back the stock. In 2022, that number has actually shrunk dramatically. In fact, that was when the market correction happened after the Fed lowered the interest rates, and yet he still spent about $7.8 billion buying back Berkshire Hathaway. In 2023, that number has increased. But that was over. That was the end of stock buybacks. Yes, next year he actually spent some money buying back Berkshire stocks, but in 2025, that number is essentially almost zero. In 2025, Warren Buffett did not spend a lot of money buying back his stocks, which means that maybe according to Warren Buffett, the stock is actually overvalued. So if Warren Buffett is not buying his own stock, now you know why some investors are actually worried and do not trust or think that maybe Berkshire Hathaway is actually overvalued. There is also a very interesting correlation between the buybacks and the cash position. So in 2020, Berkshire Hathaway had $138 billion. Even then, Berkshire had a lot of cash, and it's normal for Berkshire to have far more cash than many other businesses out there, because Berkshire is not a traditional business. They do not develop or build something. They take investors' money and they buy already established businesses. So if you're an investor, you always want to keep a huge position of cash so that when the opportunity is going to strike, you have the means to buy that company. You have the means to buy that stock. While if you actually already deployed all of your capital and an opportunity came, then you don't have the money to profit out of it. You're no longer an investor that can actually take advantage of future opportunities. By 2021, that cash balance increased slightly, but it wasn't actually a dramatic increase. It was just even $8 billion. By 2022, that number has gone down dramatically, which tells you that in 2021, he actually spent a lot of money investing in the stock market. And yes, 2021 was actually one of the best years for the market. First of all, it was clear that the pandemic is not going to destroy the world, so you can actually start investing. And in 2021, inflation wasn't actually that high. So investing in the stock market was actually by far one of the greatest options. But in 2022, something happened. The Fed increased interest rates and there was a massive market correction, which is why at this point, Warren Buffett instantly began increasing his cash position from $128 billion to as high as $167 billion. He increased his cash position by about $40 billion. And in 2023, he started massively buying US Treasury bills and doubled his cash position to $334 billion. When I say that Berkshire has a lot of cash, it doesn't actually mean physical cash. Usually, this is the cash that has been invested in short-term treasury bills, which are easily convertible into cash, because you want that money to be invested somewhere and you want it to generate some interest. By 2025, that number has increased to $381 billion, which is also a major increase since the end of last year. So why Warren Buffett is not taking that money and profiting out of the AI revolution? Why isn't he throwing that money into the stocks that are rising dramatically? Why isn't he buying Nvidia stock, Microsoft stock? It seems like Warren Buffett is actually waiting for a really great opportunity. But there is another explanation. Between 2023 and 2025, Warren Buffett came up with a completely different investing strategy. He's changed his strategy because treasury bills started providing or offering very high yields on their investments. In 2023, short-term yields were offering about 5.5% in interest. So essentially, you could just loan your money to the government and you will be receiving almost 5.5% in interest. And that's a great investment because you're not risking investing in all of those overvalued stocks. At the same time, you're receiving actual physical cash from the government. On one side, you're earning 5.4% in interest rate. On the other side, you can easily convert that money into cash. For every $100 billion invested in treasuries, he would receive $5.4 billion. So on $300 billion, he would make $16.5 billion. On $400 billion, you're already making like more than $20 billion in real cash. These are not just appreciations in stock values, but rather the actual cash that you're receiving. And it actually made sense because 5.4% is higher than the inflation rate of 3.2%. And the Fed made it clear that it will continue the policy of trying to increase interest rates to lower inflation to the point where we get back to the targeted 2%. So Warren Buffett was confident, I'm going to buy as many treasuries as possible. We go back to inflation rate of 2% and I'm making 5%. This seems like a very great investment. And then I can take that money, buy back more stocks, reducing the number of outstanding shares in the market, which is going to lead to a higher stock price. But this system only works when the yields on treasuries are higher than the inflation rate. If that dynamic changes, suddenly this strategy no longer works. In fact, investors start to worry because you're losing money against inflation. If you are making on your yields, let's say 3%, and inflation is 3.5%, then inflation would question that strategy, how that strategy makes sense when the real value of your money or your portfolio is going down. The Federal Reserve just lowered interest rates to 3.75%. And also, the Fed made it clear that 2 or 3 more cuts are coming in the foreseeable future. So by spring of next year, we're most likely going to have an effective interest rates of 3 to 3.25%. When the Fed lowers interest rates, the first rates that drop are the short-term treasuries. These are the treasuries that Warren Buffett has been massively buying. But we haven't actually fixed inflation because inflation is still 3%. So if we lower interest rates now, by spring of next year or by the end of next year, most likely inflation will jump to 3.5 to 4%. And now this strategy no longer works. The yields are 3% while inflation is 4%. Which is why the only reason that Warren Buffett is not massively investing or changing his strategy is most likely because he simply believes that the entire stock market is insanely overvalued. I don't exactly know what's going on inside his head, but if you look at the strategies he's pursuing, then that is the only conclusion that I can come up with. Another great reason is because if he had so much money, he would at least deploy some of that money buying back Berkshire Hathaway stocks. But because the last quarter illustrates to us that he did not even buy Berkshire Hathaway stocks, just shows you that he even believes that the stock itself is also insanely overvalued. But I wouldn't be surprised if Warren Buffett is waiting for a market crash or for a crisis, because he's been doing that literally his entire investing career. And 2008 financial crisis is actually a really great example, because after 2008, when we had the banking crisis, we had banks that didn't have the money to survive. We had like GM or GE also were in huge crises. And Warren Buffett got in, he started buying Bank of America, General Motors or General Electric. I don't actually exactly remember, but he purchased a lot of companies for a really great price and he made dozens of billions of dollars out of those investments. But this time with $400 billion, just imagine for a moment what Berkshire Hathaway can possibly do if Berkshire is actually right about a potential market crash. And if you haven't actually prepared yourself for that crash, then you're missing once in a lifetime opportunity. So if you want to know what are the top 5 stocks that you should be buying during a market crash, then check out the first link in the description of this video. Thanks guys for watching, and I will see you in the next one.